Good to see everybody. Today we've got our panel of experts, which are our partners. I was on the call with the Londonderry office yesterday, and we were talking about the partners, and we're so fortunate to have this group of people, service providers that in essence are in addition to being service providers are our partners, and especially in times like this because they're dedicated to a successful real estate transaction for us, and they have our back. And I think at a time like this, where we're doing business in a compressed period of time with all sorts of odd circumstances and all that, having a flight of people that are operating at a higher level than what you would ordinarily have, and that have our backs, all the time, I think is really we're just so fortunate, and and it allows us to operate at a higher level than other real estate operations. So, big shout out for our partners, and thank you for all the good work you're doing and how you're helping us deal with these kind of odd times. And congratulations to our partners for having themselves organized and operating in such a way where that they're operating at a higher level as well. So with that, I will toss it over to Angela.
Hey, thanks, Chris. Good job. So appreciate all of you guys being here as well. What we're going to do, the way the forum's going to work this morning is we're going to go down through all of our experts. They're going to have 2 to 3 minutes to kind of tee up a little something for you. And then we're hoping that you guys are going to have questions for them and that you're going to chat in some questions. We can ask them the questions and kind of keep going forward from there. So I'm going to start off with Mark McCauley. Mark, I can see you. So if you could unmute and join me, do your beginning, that would be great.
Sure. Can you hear me okay?
We can, thanks.
Cool. So first of all, thanks, and it's great to see everybody again. I was just on a little while ago. So I'll just give you sort of a market update, and I'll encourage questions. In fact, I see Rebecca on here. She sent me an email yesterday about, I guess, the way the office meeting went yesterday. And, her and I had a really good back and forth with that. And I would encourage you guys to just throw out questions. I was a little sort of, set back by the questions or the commentary, I guess, because, people do business in weird ways and, in some cases, not the right way. And I'd be more than happy to answer your questions most of all. But let me give you just a 30-second overview of where we are in the market today. You guys well know rates are at their lowest point in years. The mortgage industry is having their best year since 2003. It's crazy, absolutely crazy. Most of our people, if not all of them, are working from home, but yet somehow their productivity is through the roof, which is, testament to them and everyone. Just to give you an idea, 30-year fixed rate with no points is around 2.5, 2.625. 15-year is in the low twos. All the experts say that rates are going to stay where they are and possibly come lower. The purchase market is exceptionally strong. It's expected that the purchase market will stay strong into 2021. In fact, the Mortgage Bankers Association just came out and said they expect that the purchase market for lenders is going to be stronger in 2021 than it is in 2020. And of course, although you don't necessarily deal with refis, you get the byproduct of it in the way that, we're chasing these loans, we're having to scramble to find appraisers. So it does impact the purchase market. And I guess what I would tell you is recently we have seen the refis start to level off. And I talked about this last time. We have the GSE non-adverse fee of 0.5 point attached to refis that goes into effect with all loans we sell them on December 1st. Again, what that means to you guys is October is hell month for us. We have to close these loans. Otherwise, there's a 0.5 point fee assessed to those. And that's on us as a lender. We would never pass that on to the borrower. And so what I'm basically saying to you guys is I think what you'll see across all lenders is that the market will start to settle a bit. Appraisers will start to open up, and there's going to be more ability to get an appraisal back in time, if you will, to meet some of these 30 and 40-day closes. So, all things bode well, I think, for everybody on this Zoom meeting. It looks like purchases are going to be strong. The challenge is obviously our inventory, right? It's a combination of things with home starts at a low point right now, people wanting to have more space to work in with families and so forth. So that'll be the challenge going forward, but I do think that it bodes well for everybody for purchases going forward. So I'll leave it there and answer questions as you get them, Angela.
Angela, you're
on mute
muted.
still.
Thanks, guys. Joanne, I'm going to go over to you next with title. If you want to give us your quick update.
Sure. Thank you, and thank you all. I will just jump off where Mark was talking about the market, all of the dynamics that are going into buying and selling right now are intense. Angela had asked earlier in the week, are we seeing a lot of issues with sight unseen properties purchases? We're not. We're seeing them, as are you. We're seeing more an impact from people being in different locations. So the split closing is absolutely here. I don't think it'll change. I think it's convenient. It's easier for buyers and sellers. I will say the lender community is challenged on payoffs. And some of you may be experiencing this. We are seeing 2-week turnaround times on payoff requests. So, for instance, I started my day today and, I'm looking at a report where we've ordered payoffs twice from the 7th of this month, and they're still not in. And they're closing anywhere between next week and the end of the month. That's a big issue. There have been closings that I know we have had postponed because of payoff delays. And I will, say USDA we're being told they're backlogged 15 days on payoffs. So where this factors in on the title side is, you get those requests from us. Did your seller complete their form? Has your seller sent in their information? For you as an agent managing a sale, best thing you can do is make sure your clients are sending in the information that's requested, particularly a seller signing, authorizing payoffs, because that's where we're seeing impact given this market. The other items that you all know, you live it, and then we walk with you, is the compressed timeline. The closing cycle for cash is it's incredible. And, we do experience backlogs every now and then with title turnaround time. Fortunately, Jim and our attorneys have turned that right around, and we're on top of it. But it is no surprise to start a Monday with many requests to close on Friday. They start on the weekend, they're coming from out of state, they want to be in next weekend. And we do everything we can to make that happen, but compressed timelines are, I think for the clients coming from out of state, they're not going anywhere. So those are some of the things we're experiencing. The closing table itself is an interesting place to be. We do have an increase in anxiety about getting into a closing room. So I sense that in the coming weeks, we'll start to shift to perhaps more of the remote online notarization and just kind of reacting as people do to, this wonderful thing called the pandemic. So, but that's an update on title. I don't know if you're going to turn things to Jim for more of the in-depth title and legal side.
I can go to Jim next. That's a great idea. So we'll go over to Jim Fleming. Jim, if you can unmute.
Thank you, Angela. Good morning, Angela. Always good to see you. So to follow up with Joanne, what's making things difficult, in addition to the compressed timelines, is the quality of the titles. I'll tell you that Maine is very, very interesting when it comes to titles, especially Kennebec North and Kennebec County North and West, especially when you get into Bangor. I mean, I've been doing this for 43 or 44 years, and I have never seen anything like this. Part of the issue is that people have decided, I believe, I'm not a real estate agent, but people have decided to sell off some lands that they've been holding in their families for very long periods of time. And some of this land is, there's no other way to put it, it's junk land. And by that, I mean, anytime somebody would call me and say, well, it's been in my family for the past 75 years, well, that's when you're ducking for cover. We like to see titles that have transferred over and over again, something that we, of course, experienced down in York and Cumberland, where the titles are much cleaner because you're dealing with a more urban area, and you're dealing with properties that have been conveyed many times and have been surveyed. So, what can you do to help facilitate closings and processing and getting these files to the table? Is, first of all, when you put together a purchase and sale agreement, to be very careful and thoughtful about what is being conveyed. I can't tell you how many times, and in Maine, it's probably 20 to 30% of every transaction, something is being conveyed. The parties don't know what's being conveyed. The sellers don't really know what they have. The buyers don't know what they're getting. And oftentimes there are more than one tract involved, and of course the parties think that they have, simply one tract, but a parcel they're conveying may consist of 2, 3, 4, sometimes 5 tracts or separate chains of title, as we call them. Make inquiry of your sellers to make sure that they're conveying what they intend to convey. They're not conveying more than they intend to convey, because we see that a lot. And then surveys. Maine has a very interesting subdivision law. In New Hampshire or Massachusetts, you can't convey anything. You can't move a boundary line without getting planning board approval. Well, not so in Maine. We see homegrown descriptions. People go out there and they say, well, I'll convey, from that tree to this stone wall, and we'll call it, 4 acres. Well, the only person on this planet that can call something 4 acres is a surveyor. And sometimes we have to go back and say, look, this needs to be surveyed. And when we do that, we're not trying to be a pain in the neck, but sometimes we have to go back to the seller and say, what is it you intend to convey? So that ties into the first point I was making. Just understand what's being conveyed. And I'm not asking you to practice law. That's the last thing I want you to do. But just be thoughtful and mindful about deeds the sellers may be handing you and descriptions that they may be putting together on their own. We're seeing a lot of probate problems in Maine. We have 2 of them pending right now where, well, let me just give you an example. We have a real estate agent. Actually, I think this one is down in Rebecca's neck of the woods, but we have a husband and wife who own property. Husband predeceased his wife, and the wife dies in 1990, and nobody did anything. And when the wife died, when mom died, she had 7 children, 2 of whom have since died. We don't know how many heirs are out there. And the real estate agent saying, well, the one son's been paying the taxes since mom died, so he owns the property, right? No, wrong. So so just be careful when somebody comes in and they say to you, I've inherited this property from mom. We're obviously going to do due diligence on our end, but it'd be very helpful if you make some further inquiry. Oh, did you have the mom's estate probated? And who are the heirs? And we're just seeing a lot of that in Maine. And the same thing with divorces. We get some divorces going on right now. I don't know what's going on there.
We do, Jim. I'm just telling you, I've got agents, again,
that
I'm in
must be.
Bangor, right? I've got agents that are just making a killing right now on divorces.
Oh, are they really? Yeah. Well, we're seeing a lot of them. And just remember, when we see divorces, we need to see orders from courts. We need to see agreements between the parties approved by courts. Just because Susie walks in and says, "Oh, I own the property," it's like, "Hey, can you do me a favor, Susie? Let's make sure we have the smoothest transaction possible. Get me a copy of the divorce decree." So if we have that kind of stuff regarding probates, divorces, descriptions up front, that will be extremely helpful. So there's some details on the complications we're seeing now out of particularly Maine. We're seeing them in New Hampshire as well, but not to the degree we're seeing them in Maine. So really, that's all I've got. Unless somebody has questions.
Barbara has a question.
Where's Barbara?
It's in the chat. Does a son who inherits his...
I'll read you the question.
Okay.
Yeah.
Thank you.
Yeah. Does a son
That's
who
way too
inherits an
sophisticated
executor
for me,
will-
Angela. Chat. Okay. I
It's
see it.
okay. We're here to help you, Jim. It's all
Okay.
good.
Thank you very
Does a
much.
son
I need
who
I
inherits
need lots
as
of
an
help. Yeah.
executor- So a
All
son
right.
who's executor of will needs something from the court to confirm his right to sell.
Okay. Well, first of all, just because the son is the executor doesn't mean that he's the heir. So the answer to your question is, in the state of Maine, you cannot sell probate. You cannot sell real estate of a decedent within 3 years of the decedent's date of death, unless an administration has been taken upon the decedent. So the answer is yes. If more than 3 years has elapsed, as in the case of Mom who died in 1990, and this is conveying now, believe it or not, it's like nothing's happened since 1990. There are other things we can do, such as obtaining affidavits. If it's between 3 and 10 years, then we need to get federal and state of Maine estate tax. That's a mouthful. Estate tax lien releases, because there's a 10-year statute of limitations on taxes that may be due the state of Maine. So the answer to that question, and the short answer is within 3 years, absolutely. Can't convey without a court authority or administration being taken out. Once the administration has been taken out, it's very simple. They can sell with with what's called the 10-day notice. And as long as the other heirs get,
Jim?
Yep.
I'm also going to stop you on that one because Barbara is actually asking for New Hampshire. And I know
Oh,
we're still in
well,
Maine.
but
So
basically
if
it's the
we've got a
same.
quick answer for Barbara on New Hampshire.
Okay, it's the same rule in New Hampshire, except in New Hampshire, it's within 2 years of the date of death. So if the same rule applies, but Maine has a 3-year statute of limitations within which an administration has to be taken out. New Hampshire has a 2-year statute of limitations. And then in New Hampshire, you sell with the consent of the heirs. So if the executor is the son and there are other heirs, like maybe some siblings who are also inherited, because parents typically leave everything to their children in equal shares, then we need the signatures of those other heirs on that deed. So hopefully that answers the question.
Perfect. Thank you, Jim. I appreciate it. I'm
Okay.
actually going to move on from you now
Okay.
because I've got a few other panelists
Yep.
that I'm going to bring in here. And just for an update for everyone, please keep writing in those questions, because if we can't answer your questions live, we'll get them written down and we'll get those answers back to you. Okay. So don't worry if we can't answer your question right now, we will get to you. So I'm going to bring in Tom next. I've seen Tom's face there. So
Yes, you do.
Tom,
Good morning, everybody. How are you? Thanks for having me this morning. Well, as home warranty goes, the last quarter was really strong for you guys. I am getting a ton of phone calls, not just from agents, but your actual clients are calling me fairly regularly every week, sometimes every day, sometimes more than once a day. But they have a lot of questions. One about being a home seller, how's the coverage work for them, but also a lot of questions about they may not have a home inspection So they want to know how the coverage might work for them in the future. And a lot of people who are being sent to me haven't decided to actually purchase the home warranty yet. So we talk about it and we try to guide them as best we can into what program they want and such. But it's been very well received. If you look at some of your activity over the last 3 months, you're bordering on 25 to 35% of listing coverage on all home warranties. That's really strong. And that actually means that you're trying to generate listings with the home warranty program the way we designed it, which is fantastic. I mean, nobody else puts in listing warranties like you guys do. And that tells me that hopefully it's getting you the inventory out there that is still as sparse as it has been all year. So keep it coming. Your loss ratios are great. On an unrelated note, our office is fully staffed again, so hold time should be a lot lower. Yeah, we got hit pretty hard over the summer down in Texas with COVID. So we lost, oh gosh, almost 70% of the people. And we tried to let them work from home, but a lot of them actually were kind of ill with COVID, which we don't really see that up here. So I appreciate everybody's understanding with that, but we should be back. I do have a question here. Can the home warranty be used if a home inspection has been completed? Absolutely. I thought I read some language in the brochure that talks about covering things not inspected. No, we prefer a home inspection, of course, and we have the home inspection service option coverage. And you can't use that coverage if you don't have a home inspection. The rest of the warranty works fine, but that's just an additional coverage for Gold and Platinum, including an Elite and the Protection Plus. That just says if it passes the home inspection, meaning no repair or more inspection, we cover it from day one. If you don't have a home inspection, that portion doesn't work in the home warranty. And I talk to homeowners about that, especially the ones who are debating getting that home inspection or not. I know a lot of deals are coming through pretty quick and they want to put the offer on, waive the home inspection, get it done. We can still do a home warranty in that. It's just we can't offer the home inspection service coverage because there was no home inspection. That's all. But otherwise, the program is working great. And please, I am available for you guys to do more follow-up this fall. If you want to do some more meetings, we can do webinars at your discretion. So please let me know. And keep the customers coming. Any other?
Awesome. Thanks, Tom.
You bet.
We will keep an eye on those as they come in. I'm going to now step on over to insurance. We haven't had insurance on any of our calls. So I'm super excited to welcome Sharon Fish to the group. So Sharon, can you unmute and join me?
Good morning, everybody. Can you hear me okay?
We can.
Okay, good. I didn't have a lot of time to prepare because this is our first time on the meeting, which I'm very happy to be involved with. As far as homeowners insurance, right now we don't know what any rating structure may be coming forward for next year. Most companies do their rate revisions for the first quarter of a year, but we're hoping, losses have been held at bay and rates will remain, fairly intact with what they're at now. As far as inspections go, during the whole COVID situation, which you probably saw with your own inspections, the insurance companies weren't really going out to inspect. They were relying more on, photos from the customers and that type of thing. But now that things are opening up, they're going back to doing inspections. We may have people that are coming up for renewal next year that now that things have opened, they may get physical inspection of their property. So it's just, it's still in the kind of learning going forward stages with this COVID situation. On the auto side of things, probably most of you personally noticed that back in maybe May or June, you received a little bit of a discount from your auto carriers. They took it upon themselves. A lot of people were being home, weren't out on the road traveling and commuting on a daily basis. So they all gave a little bit back to the individuals for usually premiums for 1 or 2 months out of the year. So hopefully all of your carriers sent something to you. But that's basically all, that we have going on at this point in time. So I don't know if anybody has any questions.
Super. I don't have any right yet, but again, people can send them in if they'd like to. So thank you for joining us, Sharon. I really appreciate that. I do have another question for Jim. So Jim, one of the questions that somebody typed in for us was, what can we as homeowners do to make it less messy for when we pass? So would you recommend that people put things in a trust, or what kind of advice might you have there for some estate planning?
Well, first of all, whether property is in a trust or held by an LLC or held by individuals will not necessarily change the marketability, or as we call it in Maine, merchantability of the title. So that's not going to change the underlying issues that we look for. And trusts really are to be thought of as an estate planning tool, not something to to protect real estate or to somehow improve the quality of the title to the real estate. That's just not going to happen. So whether you put property in a trust or not is something to be taken with under counsel with your estate planner, your CPAs or your attorneys, whomever you use as a planning professional. But I can say this: what we are seeing more and more over the years, especially in the past, 3 to 5 years, is the use of trusts much more extensively. And the reason for that is the baby boomers are getting to the age where they're going on, they're passing on, and we're seeing, I'm seeing people die whose mortgages I closed 30 and 40 years ago. Fortunately, I'm not one of them. And so they are going to their planners, and they put these properties in trusts so that they can avoid the probate process. And whether you want to avoid the probate process or not is, again, something you got to take into account with your attorney. It depends upon the nature of your estate. So the answer is, it depends. And that's the standard legal answer. It depends. And you need to seek professional advice. But in terms of the quality of your title, it will not have an impact upon that at all.
Thanks, Jim. Appreciate that. Joanne, for title, is there an uptick? Are you seeing an uptick in cash transactions?
We are, and then it's interesting, but we're also seeing now an uptick in refinance of those cash transactions with, I'm assuming the mindset there is, let's just get it. It's a competitive market. We can pay cash. But let's, as Mark pointed to the rates, let's use someone else's money in the end. So yes, we are.
Super. Thank you. And that actually gets me over to a question for Mark. Mark, you hit on a couple things. You hit on the uptick for refinancing, right, starting next month. But also, what are you kind of looking at? So there's a couple of question thing for you, is what kind of outlet maybe are you seeing for 2021? And Maine just ranked 6th nationwide for foreclosure filings, and in 3rd in September. Wow. So are you thinking Maine's gonna have a trend in foreclosures, looking at that for 2021? How are foreclosures looking?
Yeah, Angela, hard to tell. I will tell you that there's nothing on our radar. What we keep talking about is that particularly Maine and New Hampshire and Vermont are what used to be referred to as moving to Colorado, right? That was sort of the trendy place to go. And like it or not, we're starting to see out-of-state license plates from New York and Pennsylvania, New Jersey, of course, always Massachusetts. No, not really. I mean, we're in such a upside down world regarding sort of the obvious, which is the virus, but also from mortgage lenders' standpoint, things are trending well. The forbearance has been trending down for the last several months, which is just great news for lenders. That was really something that could have derailed everything in terms of our ability to lend. You know, the big unknowns going forward are going to be what are jobs going to be like? You know, what is the virus going to do? Are we going to have a vaccine? Can the economy withstand sort of the second rush, particularly you know, hotels and bars and restaurants in the winter months up here particularly? I mean, I think we all enjoyed going out to eat in the parking lot of a restaurant. How much fun is that going to be when it's, you know, 10 degrees out? And I certainly hope that doesn't come to be. But, you know, I think what we're all looking at right now is there's way more upside that we're looking at than there is down. And things are trending in a very good direction. But much like we all experienced in March, one big thing, call it the virus, can change everything going forward.
Super. Thanks for that. I appreciate it. Does anybody else have any questions? Because we've kept you now here for a little bit over half an hour. And Rebecca.
All right,
would you
Mark,
like
you
to
ready
ask
for
your
me?
question?
I'm always ready for you.
All right. So I put numbers to it yesterday, and I collected a couple more of these stories after our business meeting. So the numbers that 20% of the agents in our business meeting yesterday experienced receiving a conventional, an offer with conventional financing terms in it, and then shortly thereafter putting it under contract, either through the inspection phase or right afterwards, making the request to change that either to FHA or VA. And so the agents are all dealing with that now. And I think that's, you know, a desperation for folks. We've even had I think I mentioned to you yesterday, we even had somebody on the co-broke side alter a pre-qual letter to make it appear as though it was conventional. So we do have agents that are desperate out there right now. But part of the discussion turned, and an agent was working with a lender and not a CMG lender that told him that they were making more, lenders make more money on FHA loans. And so that's part of the reason for the change, is get them into the contract using conventional and then switch them out because the lender makes more. Is that true? And then, you know, do you have any tips to assist the agents with this?
Yeah,
Phenomenon.
actually. So yeah, thanks, Rebecca. So that was the email I referred to at the beginning. You know, I've been doing this 30 years, and I guess I should say nothing shocks me anymore. I was very surprised by that email. So the yes or no part of this is, do lenders make more on a government loan, i.e. FHA or VA, than they do on a conventional? Yeah, margins are greater. Much like you would make more on you know, $1 million property than you would on a $500,000 property. You know, whether it's 5% or 6% of $1 million versus 5% or 6% of 500,000, you know, the math is the math. That being said, so I'll try to be quick with this, but what I think this is all about, Rebecca, is because of the nature of the market right now, which is just, you know, running around with your hair on fire times a million. I think it's very important to understand, you know, we talk about the difference between a pre-qual and a pre-approval, right? I mean, a pre-qual, just so everybody understands, is nothing more than, I'll say, me as a loan officer having a conversation over the phone with somebody and doing what I would call a pencil sketch pre-qual. I don't validate anything. I don't pull anything. I just run numbers and I send them over a pre-qual with my name on it that says, based on the conversation I had, and once they go under agreement, the need to have them go through a full underwrite, they can afford a property at 123 Main Street. A pre-approval is way more than that. A pre-approval is validating what you receive. So it's pulling a credit report, it's looking at pay stubs, it's validating assets. And the reason I talk about that is because what you're referring to is a loan officer, particularly right now, when you're running around with your hair on fire, if you sense it's a really strong borrower, and again, you know, I've been doing this 30 years. I think in a 2-minute conversation, I'm going to be able to get a feel for the borrower, and pre-qual may be okay. Although right now in this market, sellers are demanding a pre-approval, which is fine. But where I'm going with that is it's going to be really important that as a seller or a listing agent, that you ask those questions. You know, this says pre-qual. How much time did you put into it? Or is this just what I call a pencil sketch? If it's pre-approval, the expectation on your part as both the seller, the buyer, and the agent is that there was time and energy and verification put into this by the loan officer, and let's be clear on that. The loan officer is the one doing the validating, and that loan, if it was submitted as a conventional loan, the expectation by everybody should be that that will close as a conventional loan. Now, the times when that doesn't happen would be when there is either misinformation provided at the time of a pre-qual or pre-approval, or there was just something that occurred. When you went to validate it with an underwriter, something popped up and now it disqualifies from the particular program, and you have to then put it into an alternative program. I want to believe that's exactly what's going on. I'm very surprised to hear your numbers, Rebecca, about the 20%. It tells me that people are rushing and not doing a thorough job up front, which is what we do. But you know, in order for that to hold true throughout, if someone does their job up front and carries it through, then the loan should close as intended. There will be instances, and they happen, right? I mean, maybe it's property related, by the way. It doesn't necessarily have to be qualifying related, but there is likely going to be a reason why there had to be an alternative form of financing presented, or frankly, it's incompetence on the part of the lender and or the loan officer.
Thank you, Mark. Appreciate that. That's a great answer. And now I'm going to bring on a new expert. So expert Chris Masiello is going to take a question.
Well, gee whiz, thanks. It's quite an introduction. Just to address Denise's question, Denise Thomas from Keene. So I have clients talking about waiting to purchase because they believe there's going to be a recession. So that's a really great question. I think it kind of goes along with the foreclosure piece too, right? So let's kind of string those together. So of course, nobody knows. You know, I was at the gym this morning watching the news, and you know, Europe is going through another flight of restrictions, right, due to COVID and all that. So, you know, you probably stand to reason we could see some of that here, right? But generally speaking, okay, when we have recessions, they kind of, you know, our economic cycles historically have been rising tides either lift or lower all boats. Okay, the entire country has either been in a recession or the entire country has been in an uptick. And the indications are that won't be the case going forward. You're going to have regions that are going to be heavily impacted, but they're going to be heavily impacted from things that we've never seen before or never seen, you know, in our lifetimes. Things like migration, right? Like we've been talking about, dispersal of population, and then along with the dispersal of population, the trailing wealth that goes with it. So last week I was reading an article about, and I'll send some of these to you guys. I'm careful about what I send you because I don't want to flood your email with things, but if I get more of these, I'll send them so you can get a sense of what's going on in other parts of the country. You know, New York City's got 16,000 vacant apartments. That's just apartments. That does not include townhouses, co-ops, and condos, and brownstones, things like that, right? So you're going to see regional economic differences, and I think they might be quite stark. To Mark's point about, you know, this thing where, you know, I feel the same way. New Hampshire, Maine, and Vermont's like the new Colorado. I think this is going to be a region that will do better than the rest of the country. And there's a few of them, not just this one. And so recession will be regionalized. I don't think there's any way about that. As we get economic growth here, that economic growth is a byproduct of the bleed off of economic activity in one region in favor of another region, of which we are one of those regions. So Denise, I think to answer your question, you know, to the best that we can size it up, I wouldn't wait, because no matter what happens, okay, even take the very worst circumstance, we get another shutdown in November and no one gets to go outside again until April, right? Well, I'm just telling you, people will be up here, they'll be renting school buses to get here, okay? So, you know, so this area, you know, what people like about this area is the quality of life, the sense of community. It's what's bringing people here. And that's integral to our environment. So I don't see this part of the country having a severe recession. There might be some recession, of course, because if the whole country goes into one, or significant regions, it will impact you one way or the other, but not significantly. Like we won't be in the same place as New York, for instance, or maybe Connecticut or Delaware or places like that, where people, or Philadelphia, right, where people are really leaving those urban areas, for suburban areas for more urban areas. So I think the long and the short is, it's real estate has never been a good short-term investment. Okay, that's just been the history of it. I think if people are thinking about buying, it's going to be less expensive today than it's going to be next year, the year after, the year after that. I think that's pretty much in the cards at this point. And who knows how long it's going to take for this dispersal of the population to start to thin out. But I think you're into it for years. I don't know if that's 2 or 3. 10 probably seems like a long time. But we're certainly in in this type of cycle for the next 2 or 3 years, I would think, at least. I wouldn't dare say anything beyond that. I mean, even to the point where we're looking at our website and really saying, okay, look, we've got to make it easier for people to understand how to do sight unseen offers, and actually put that facility in the website, because we're going to see a lot more of that. So I hope that helps.
Can I just ask one more question on that? So one of my clients seems to think that eventually these people that are remotely working are going to be called back, that it's not sustainable to have everybody working from home, and sort of a post 9/11. And I know this is not, COVID is not an apocalyptic event like that and a one-time thing, but they're thinking that, people are going to have to go back to Massachusetts, and therefore those homes are going to be available.
Obviously a lot of this is speculation. You're starting to see, I think that like everything else, right? Nothing is always one thing, one way or another. You will have some industries where they will be able to have people working remotely. The wholesale side of the economy, whether it's in finance or insurance, technology, anything that's kind of back office-ish type thing, where they're coming out of areas like Manhattan or Philly or Baltimore, right? Where they're paying big money. Even like take Burlington as it relates to Boston. It's big money to rent office space in Burlington. Okay, so yeah, you will see some of that, and the estimates now from the HR world is that it's probably going to end up being like a 60-40 split. 40% of the people, in the wholesale end of the economy will be able to work from home. But organizations like us, right, we're in the retail side, and we're a community-based company. Like we can't not have offices in downtowns, right? Because we're part of the community. Like if you want to be part of a community as an organization, right, you've got to physically be there. People are moving here for the sense of community, right? They're moving here so they can interact with people like us, right? So for us, for instance, to go into hiding is really a bad idea. But I don't think that, I think that companies are really strategically looking at what positions they can, disperse and say, okay, look, you can live any place you want. And then I think that there's other, there's other parts of their workforce that they, yes, that are going to want to be, in office. But to Mark's point about his offices have been closed, but productivity has gone up, right? And so there is that element of it. I think the challenge is going to be, if you are running a remote operation, is how do you keep a culture? Because it's almost impossible to keep a culture remotely. So, I think for businesses that, again, think about, the back office operation of a bank or something like that, or an IT company or those types of things. Yeah, people can work from home, but generally speaking, the retail side of the consumer facing part of the economy will be working in offices. So it won't be all one way or the other. But the people won't be retracted though. I think the people who they've released and they've said go someplace, they've already thought that out. Because don't forget, they had 3 or 4 or 5 months to figure this out. It's not like they made a decision in a week. So they've already gamed that out. I don't believe that they'll be bringing those people back. I just don't see that happening. And unlike 9/11, we have technology now that allows people to work remotely. After 9/11, there's some scattering of the population, but it was super fear-based, and it was very short-lived because you didn't have the technology. You didn't even have cell phone coverage really in a lot of places. So hope that helps.
Good stuff, Chris. Thank you. Thank you. I'm gonna pull in Ed for a second now. I know Ed had an announcement of sorts.
Oh, you make it sound like a big thing. No, not really. I just saw Wendy Griffith on here, and Mark, I think I mentioned to you last time that Wendy was able to use some information that you gave on this call to help save a transaction and to right a wrong that some other loan officer was, had done. And just for everybody to know, I think the cool thing that Wendy told me was, even though she wasn't on the call, that she catches these recordings on the weekends, and so you can still, even if you miss any of these calls, please make sure you check through the video library. There's some great stuff in there. And thank you, Mark, for helping Wendy, and thank you, Wendy, for listening to Mark.
I would say thank all of you.
I know we're running really late today, but just one thing I wanted to say. So the TV commercials that we produced that are running now, all won an award. I don't know if you guys knew that or not, but our flight of TV commercials that Lorraine was, responsible for putting together, and through the marketing department, and doing the copy and the look and the feel and all that, along with Channel 9, who did our production. They were submitted and they got recognized in their category. So congratulations to Lorraine, and thank you.
That's a big deal. That's awesome.
Yeah, that's a huge deal, right? That's it.
All right, guys. Well, thank you all for joining us this Wednesday. We'll see you all again right here next Wednesday, where we're going to have Jen Marchetti, who is the marketing director for BHGRE, and she's going to talk a little bit about the brand and some fun and exciting things there for you. So look forward to seeing you next week, guys. Bye.
Thanks. Bye.
Take care.